go. All right, good morning, Dennis. I hope you've been having a great day today. We are the Venture, and today we're going to be working on the case about Spruce Land Properties, Inc. My name is Sayed.
I'm Danica.
Great, so let's get right into it.
We are presented with the problem from Spruce Land Properties, which is how can we increase the value of our share price for shareholders. We start with our qualitative analysis. With our SWOT, we have our strength, which is obviously our community, because we're heavily built within the community of Slave Lake. And then we also have our weakness, which is our share price, which isn't as much as it could be. And we also have our opportunities, which is to sell to any outside companies. And then we also have our threats, which is the unstable Alberta economy.
Great. So that was our first qualitative analysis. After that, we did our Porter's 5 forces. And the key points that we were able to draw from this is that the threat of new entrants is really low because Spruce Land Properties has been in their region for a long time. They have that first movers advantage, so they are secure in that area. Same with competitors. They have a lot of regional support, so they're solid there. And they have a really good relationship with their suppliers, with joint ventures as well, and being a social enterprise, the suppliers don't have that big of a bargaining power in terms of our 5 forces. After that, we did our next analysis.
The shareholders hold high power because they have high voting rights within the company's decisions, and high interest because many of them have been with the company for more than 45 years. And then we also have the board, who have high power as well because they approve any decisions made by the CEO. So they have high interest because, again, many of them have been with the company for several years. And then the community, who have low power. Any decisions the company makes, they have no say in whatsoever. And then they have high interest because many of them do work for Spruce Land Properties and they do live within the community itself.
Great. So our key takeaways from our qualitative analysis was that Spruce Land Properties does have a really strong position in the region. We have a strong relationship to our shareholders who have been with the company for a long, long time, in addition to the community who we have a lot of support from. And we have a story going with them too, since we've been in the region for a long time. And as Danica mentioned, our financial future is uncertain because oil prices, this case is from 2015, and oil prices were falling really, really fast. It went from $100 per barrel to $5, so that's something we want to keep in mind too. And with that, we will go into our quantitative analysis. Just some quick financial ratios. So our current ratio is currently 2.06, which means all of our liabilities are covered. Our return on assets has increased from last year, and so has our return on equity, which means the company is improving. And with that, we'll go on to our strategic alternatives. So what should we do?
All right, begin with it. We've also given our alternative names based on the solution. So C, we could restructure the company and divest some assets and shrink the company a little bit. Or we could branch out, expand. Since their smaller businesses may be selling their properties, we could buy up some more properties. And then we have New Leaf.
Right, so our final alternative is to actually dissolve the company itself. As the case talked about, there was an initial offer that offered to buy all of new Spruce Land Properties' assets. So that's something we can consider, given how the financial situation is at the moment. And with that, we did a quick decision matrix. Just key points here. 2 things we want to point out is we want to increase value for shareholders. As we discussed, that's one of our key points that we believe needs to be highlighted, which was really important in the case as well. And we also want to point out how Alberta's economy at this time was extremely uncertain. So with those 2 factors need to be taken into account. Our first option, which was C, which was just selling some of our assets, even though it has a good community story because it stays in the community, it doesn't actually help our shareholders as much if we're reducing just some of our assets there and just making the company smaller. And same with Ranch, which was to expand and buy other properties. Given our uncertain financial future and given the firm's conservative positioning, that might not be the best strategy to take. And so, with that, our final alternative, which was New Leaf, which is to dissolve the company itself and take the offer given by the initial offer becomes the most attractive alternative. With that, we'll go on to our recommendation.
All right, our recommendation to Spruce Land Properties is to turn over a new leaf, basically. Accept the initial offer's request to buy in the company's assets and you know, raise our costs a little bit.
Right. So, why should Spruce Land Properties turn over a new leaf and dissolve the company? Well, there were some three factors that we thought were really important in this situation that we had to consider. That was that interest rates are dropping at this point. Capitalization rates are down and our appraisals are up, which means now is the time to sell if we want to go that way. And another thing the case talked about was the board looked at this opportunity and said that it could be a great opportunity for our shareholders and as well as our corporation, given the situation. And finally, the most important point that we wanted to bring up was also our share price. We want to increase this share price for our shareholders. Many of them have been with the company for a long, long time, since its inception, for nearly 45 years. And it's about time that they actually receive the value that they've put into this company. Because right now, share prices are way below market prices. So with that, we'll go quickly over our implementation plan.
All right, so these are just a few steps we'll build on later a little bit. You can invest back into the company, well, back into the community, after selling in the company. Then step 2, we can engage shareholders in the community. And step 3, we can also talk to the stakeholders early on and let them know our financial situation.
Great. So a little bit more detail on that. So an important aspect of this strategy, of this alternative, is marketing to stakeholders. We really want to emphasize the fact that this is a new chapter for the community. As the shareholders and the community, we all built this together, and everyone's put in a lot of time and value into it, so it's about time that they get that value back out as well. We also want to mention that the initial offer that's offering to buy these properties has a lot of experience in Western Canada, so the properties will be well managed. And we also want to mention that this is a community story, and the Spruce Land Properties has helped enrich people's lives socially and financially. There've been nearly $11 million in dividends, a lot of local involvement, and like we said, it's a chance for the company to turn over a new leaf, start a new chapter, and has a chance for new investments once you get that value out. So just quickly going over some key steps. We want to work with lawyers and consultants to get our legal and financial stuff sorted out. We want to start engaging the community early on, the same as we talked about, they're a key part of our key stakeholders. And the same goes for our employees. It's better to have them engaged early on.
And then we can collect our account receivable, any money that's owed to us. And then finish off some legal work with the paperwork, really push it through. And then afterwards, we can continuously sell our assets to the company with the initial offer over a number of years.
Great. So just a little more detail. So in the short term, we'll be working with our lawyers, engaging shareholders, getting our paperwork started. In our intermediate term of 6 months, we'll continue engaging our employees and community, and we want to begin divesting our assets at this point as well. And finally, our long term, in 5 years, we want our $123 million in assets divested. We want our shareholders to gain that value back. And finally, we want our shareholders, and we want to emphasize the fact that shareholders can potentially now reinvest that value into the community, start over a new chapter, and turn over a new leaf for the region. All right, that's our presentation. Thank you very much. Are there any questions? And we can find some answers for you.
Judges, you can now ask your questions if you have any.
Okay. Question, going back to the beginning, when you did your SWOT analysis, you identified one opportunity. Were there other opportunities that
Yeah,
you
for sure.
looked at?
We do have a few more opportunities that we considered. And other opportunities was that we do have a lot of rapport with our oil and gas companies in the region. We have that opportunity to sell, and the company itself is really conservatively placed. So there was that market opportunity to actually buy some properties from other smaller companies that might be divesting at this point. So those were some options that we could have looked at as well.
question about the buyer. So we have received this offer, and I'm just wondering, I guess, what qualities do you think a potential buyer would need to have to ensure that, you know, they maintain the sense of community and that they are really taking care of our shareholders?
Yeah, for sure. So, like we talked about, this is a company that's been in Western Canada for a long, long time. So they do have that experience of being in the region. They probably have experience of working with oil companies, with working with regional communities as well. So that was one of the key things that we also considered. So we want people with that experience that moving in as well.
How do you know the offer was a good offer?
So the offer itself was to buy all of our assets, right? And like we talked about, our best alternative for that we could see based on our decision matrix as well was that we wanted to, where is it? There we go. Was that out of all of our key factors that we looked at, like our regional advantage, our value for shareholders, community story, as well as our uncertain financial future, we decided that given the way the oil prices were, they were in free fall at this point. We don't know how the future's going to look. We've been doing good so far, but at the same time, we've been conservatively placed, so we do have some cash backed up. But we decided to increase that value for shareholders, which was the most important thing that we wanted to do. And considering the fact that our financial future is uncertain, we want to divest our properties. And with the initial offering to buy them at this point, when the opportunity to sell was good, we decided to take that offer.
So I have a question. So you're proposing that they take this offer, and so there'll obviously then be a big cash inflow into the company.
Mm-hmm.
So you're saying that you want to have shareholders be able to get their value out, but also continue to reinvest. So what are you envisioning? Are you going to basically wind the company down and do a huge cash investment to your shareholders, or is actually a lot of that going to be retained in the company and you're going to be investing in new things?
We're planning to do a good, to divest into our stakeholders, as you said.
So you'll be essentially winding down the company at that
Exactly,
point?
yep. And like we said, a lot of these shareholders are starting their estate planning as well. So they're at that point where they should be getting the value back that they invested early on too. So that was one of our key deciding factors too.
So in this matrix,
Mhm.
you're weighting a variety of different factors,
Great.
but the overriding objective is to increase the value of the shares for shareholders, is that correct?
Yeah, so that was the most highly weighted factor that we considered. So that's why we gave it a high priority. But we did look at some of the other ones too, and those played a role in our decision too. But even then, looking at our financial future, we also considered the best way to make those two work together was to divest the company and turn over a new leaf, as we said.